Welcome to the June 2026 edition of the Roundhill Weekly Single Stock ETF Rankings. Roundhill currently has 20 single stock weekly pay ETFs, and these all use leverage. So if you want to invest in these, you should have a bullish outlook. And today, I'll rank all of these from very bullish to very bearish. These rankings are for entertainment only, and I'm not recommending that you buy or sell any particular investment. This is not financial, investing, or any other kind of advice. You need to do your own due diligence for your investments. Let's get started. These ETFs aim for 120% of a stock's calendar week return. They invest in total return swap agreements and common stock, and I would consider these high-risk investments. Since they use leverage, these are designed for people with a bullish outlook on the underlying stock. If you're a conservative investor looking for stability or have a bearish outlook on the individual stock, these weekly pay ETFs are probably not for you. These rankings come from my brokerage Fidelity and are based on the LSEG StarMine Equity Summary Score methodology. This is an example of Wells Fargo, and you can see that it's rated a 6.6 out of 10, which falls in the neutral category. There's a one-year history showing how the rankings have moved, as well as the individual analyst reports they're based on. There's a great explanation that anyone can read whether you have a Fidelity account or not that explains how this equity summary score is calculated. I'll put a link in the description. But to summarize, the first thing they do is normalize the ratings. And this helps account for analysts who always say to hold or always say to buy something. They then weigh it on the 24-month track record, which is essentially the batting average of that particular analyst. Then they create a force-ranked distribution of the top 1,500 stocks. So there's some meaningful differences in the rankings. Of course, there are some important limitations that go along with this ranking system. It tries to predict relative performance, meaning how things will compare with each other, instead of saying something is absolutely going to go up or down. It's certainly not a guarantee. It has a limited history to draw on. The scores are absolutely a snapshot in time. They can and do change all the time, as often as the rankings are updated by the individual analysts. And it's definitely not a buy, hold, or sell recommendation. Here's a look at the ranking tiers and how they're broken down numerically. The LSEG StarMine rankings are based on the underlying stock, not based on the Roundhill ETF. I'm just using that as a surrogate for the Roundhill ETFs. And remember, these can and will change regularly. This was recorded on June 18th, 2026, and will likely be different by the time you're viewing this. Also, I'll keep the stocks in order even within each tier. So the stock on the top left of an individual tier is rated higher than a stock further to the right or down. Let's get started with the rankings. Unfortunately, there's still no equity summary score for ARM. Therefore, ARMW is not going to be ranked again. I've put its symbol up in the top left just so that we know we haven't forgotten about it. As always, let's get started in the neutral tier. Topping the neutral rankings is Berkshire Hathaway at 6.8, followed by Amazon at 6.3, NVIDIA at 6.1, Netflix at 5.9, Google or Alphabet at 5.5, United Health Group at 5.1, and Meta closes out this group at 3.8. We can look on Roundhill's website at the assets under management for the weekly pay ETFs to see which of these is the most popular. In this particular group, NVIDIA at 117.76 million and Google or Alphabet at a little over 87 million are the most popular based on assets under management. NVDW is paying almost 43%. If we scroll down and take a look at its distributions, you can decide for yourself if that's consistent enough for your expectations. TOPW is paying a hair under 30%, and let's take a look at its distributions. The most recent was about 40 cents per share. This is the price return chart for all of the stocks in the neutral tier. Currently, we're looking at the year-to-date time frame. And remember, this is the underlying stock, not the Roundhill ETF. What's interesting about this chart to me is UNH is leading the way at up almost 23% year-to-date. And on the opposite end of the spectrum, we have Netflix down about 18.5%. Google's up about 15%. NVIDIA up over 11%. Amazon up 2.5%. Berkshire Hathaway down about 2%. And Meta is down about 14%. Let's zoom into the 1 month and see how things look. Pretty interesting. Meta's down about 6%. United Health up about 4.5%. Google down about 10%. Netflix down almost 14%. NVIDIA down 5.5%, Amazon down over 10%, and Berkshire up a little over 1%. Again, this is on price return, since we're ranking the underlying stocks. Now we're going to drop down a tier to the bearish category. Broadcom leads the way at 3.0. Alibaba and Palantir both are at 2.7. Microsoft at 2.2. Coinbase at 1.8. And Robinhood at 1.1. In this group, Robinhood and Palantir happen to be the two ETFs with the most assets under management for Roundhill WeeklyPay single stock ETFs. Remember, TOPW here is an aggregate of funds, and we'll talk about that later. Hood, the top fund, is currently distributing about 82%. And if we scroll down and take a look at the distributions, you can see that this chart is not great. Everything's trending down, although I will say there's been a little signs of life here at the end, with the most recent distribution at about 49 cents per share. If you take a look at Palantir, its distribution is about 39.6%. And it also does not have a great distribution bar chart. Everything seems to be trending downwards. The most recent distribution was a little under 15 cents per share. Here's the year-to-date price return chart for the bearish tier. Broadcom is way ahead of all the others, up almost 18%. Robinhood is in the middle, down about 7.5%. The other four have done really poorly year-to-date. Coin down almost 26%, Microsoft down about 22.5%, Palantir down over 28%, and Alibaba down almost 28%. Let's go take a look at the 1 month chart. And things have really turned around for Robinhood, up almost 41.5%. Alibaba is down 20%. Microsoft and Coinbase are down about 10 or 12%. Palantir down about 4%. And Broadcom down about 2%. Now we'll jump up to the bullish category. There are only two funds in this tier, Apple at 8.4 and Costco at 7.2. Neither of these two funds are near the top of Roundhill's WeeklyPay ETFs based on assets under management. Just scroll down to the middle of the pack to find Apple at about 42.9 million, and even further to find Costco at only a little over 12 million. AAPW is paying a little over 12% annualized distribution rate. If we scroll down to take a look at the distribution chart, we see it's a little more steady than the ones we've looked at previously. COSW is distributing a little over 26% annualized, and its distribution chart is also a little more steady. The most recent distribution was about 21 cents per share. If we take a look at the price return year to date for Apple and Costco, we see they're neck and neck, both around 10%, but Costco with a slight lead. If we zoom into the 1 month, it's a very different picture. Apple's about even, and Costco's down almost 10.5%. We've dropped to the bottom of the barrel, the very bearish tier, with three underlying stocks for this month's episode. Uber at 1.0, Tesla at 0.4, and Strategy all the way at the bottom with a 0.2 very bearish rating. We don't have to scroll far on the assets under management list to find Tesla at a little over 96.5 million. Strategy is a little lower in the middle of the group, here at 47.5 million. You have to go all the way close to the bottom to find Uber with only 3.5 million under assets. I don't know if I mentioned it earlier, but Alibaba is down here way at the bottom with only 1.3 million in assets. It makes me wonder if it's even profitable to run an ETF with this low of a value. TSLW is paying a respectable 62% distribution rate. If we take a look at how those distributions have been coming out, we see they've kind of settled in this range. The most current one was about 27 cents per share. MSTW is paying almost 93.5%, and its distributions have gotten low. That's not pretty. The most recent is about 8.5 cents per share. Year to date, the price return for all three of these underlying stocks is not pretty. MSTR is down almost 25%, with Tesla and Uber both down around 13%. On the 1 month chart, we see Strategy is down over 31%. And again, Tesla and Uber are close to each other, both around negative 4%. And that leaves us with our final tier, the very bullish category. And on this month's episode, we only have one stock in this category, and that's AMD at a 9.3 rating. AMDW is Roundhill WeeklyPay's fifth most popular ETF based on assets under management, with a little over 88.5 million. The fund is currently paying out over 100%, which is incredible. If you take a look at the distributions, it looks a little different from the ones we've seen recently, with a significant upward trend, despite a couple of low distributions. The most recent one is over $2 per share. AMD's stock price has been on a tear recently. Year to date, it's up over 147%, and for the last month alone, it's up over 25.5%. There are some major differences between this episode's tier ranking and the one I did last May. AMD rose up from the bullish tier to the very bullish, while NVIDIA fell from very bullish to neutral. Costco fell one tier down to bullish, and Broadcom fell all the way from very bullish down to bearish. So where does that leave TOPW, which is Roundhill's second most popular weekly pay ETF based on assets under management, just barely in second place by about $2 million. It pays out a healthy 24% distribution rate currently, and it consists of Roundhill WeeklyPay ETFs tied to the 25 largest U.S. companies by market capitalization. These are all of TOPW's holdings. The thing that stands out to me, based on this month's equity summary ratings, is that the top stock, AMD, is not found in TOPW. Remember, TOPW took the place of WPay. In this chart, I've color-coded in yellow the ETFs that are included in TOPW's holdings. The good news is they have everything in the bullish tier and all but one of the ETFs in the neutral tier, with a little bit of the bearish and very bearish ETFs. But like I mentioned, unfortunately, NVDW is not a current holding. Let me know in the comments, do you agree or disagree with any of this? What are you bearish or bullish on? If you found this episode entertaining or useful, I'd appreciate it if you'd like and subscribe. And a reminder that nothing I said today is investment, financial, tax, or any other type of advice. I'm a stranger on the internet, and you have to make your own decisions about your investments. You can check out previous videos in this Roundhill series to see how the equity summary scores of the ETFs have changed over time. And if you're interested in my small account margin strategy, check out the other videos on my channel. Good luck hunting those infinite dividends. Take care.